Just get that one-off in the interest income out of the way, sir. How much was that? Adjusted for that, what would NII be? What would net interest margins be, sir?
The next quarter also we are looking at the same lines, sir, whatever it is there. But some stress is there on the cost of deposits. That's because from January 1st onwards, we are seeing a steep increase in the deposit rate of interest. So some stress is there, but still, as earlier we have given the guidance that our NIM will be 2.9 to 3. We are still continuing with that, and our efforts will continue to be nearer to the 3%.
NIM should be closer to 3%. Sorry, Mr. Raju, can you hear me, sir?
3%. Raju, can you hear me, sir? Sir, I can hear you. Can you hear me?
I can hear you clearly. No, I was just asking you, there was a one-off in the interest income, right? How much was that? What was that?
No, that is actually, it is the one other income might be, you are speaking about the other interest income?
Income, yes.
1800, it has reflected there in that presentation. That is a regular, it is a interest on reverse repo, interest on swap rate of interest, interest on refunds, standing deposit facility. These are a combination of several activities. Generally, you see that our LCR is 135%. So we have liquidity enough. Our retail term deposits are growing absolutely comfortable in the current financial year. Our absolute number 31,000 crores we grown in the retail term deposits. Almost every day 3-digit figure is accumulating in that retail term deposits. We have 6% excess SLR in our books. That excess SLR window also we are using from borrowing from the RBI at a much cheaper rate compared to the domestic deposit rates. And we are also using, you know that our actually the priority sector is very comfortable for us. Our priority sector is, before selling the PSLC, it is around 56%. So we have ample scope for claiming the refinance from NABARD as well as the SIDBI. All these avenues we are using effectively. When the liquidity problem is there in the market, we are using it in the overnight lending or a short-term lending and all those things. That is the reason, because the demand and supply, there is a huge demand for the liquidity, we are using that. Again, let me confirm to that, our NIM will be at 3%. Again, our NIM, what is the helpful for us is, our credit cost has come down to below 1%. I am sure that you might have observed that. That is also helping us in maintaining that NIM.
Okay. Mr. Raju, hi, good morning. This is Sonia here. I just wanted to take a step back from the earnings and talk a little bit about the Canfin stake that Canara Bank has. What is the update on that? Any plans to sell stake in the near future?
No, still we believe that there is a scope to, the value will increase much better, madam, in another 1 year period. So once that what we assumed it should be at least a minimum 4-digit figure, then we think of disinvestment in that. First we are working to make that the potential to take out of that. Whatever the potential available, we want to take that potential to the optimum level.
And has RBI instructed you to sell stake in Canfin? I mean, any kind of, a communication that you've received from the RBI to that effect? And what are we looking at in terms of a timeline?
No, madam, there is no such guidance from the regulator to reduce our stake in that.
Okay, there's nothing. Mr. Raju, forgive me to sort of go back and I'll just try and one more time. So there is a non-core other income which you've spoken about. But is there a other income in the sort of interest in the NII, in interest income? And can you quantify that for us? Because I think in the call also you mentioned that that will not rise. Go on, sir.
But actually, that will not rise means why we are told that it is actually interest what we are earning from the call money market or overnight lending and all. It's month to month, it depends on the liquidity position in the market. It's a demand and supply. But there is an increase for last 3 quarters on that. If the liquidity position is tight, we may do the same thing in the current quarter. But it may not be a same scenario for the continuously for the every quarter. It's a purely demand and supply position.
Okay, all right. Hi, sir. Good morning. Nigel on this side. I've just looked at your employee cost. That's gone up by close to 750 crores on a quarterly basis. There was that wage revision of around 17%, and I understand, I think that you had provided for 15%. Could you tell us what is the outlook on employee cost? If you could give us a quarterly number for quarter 4, and also for FY25, what will this employee cost look like?
Let me clarify to you that the employee bipartite settlement once in 5 years, it happens in the industry, and the current bipartite settlement is due from 1st November 2022. So up to December, it is a 14 months has been completed. In the first quarter, we were in the impression that it may grow at 10 to 12%, so we have provided it at 10%. Then next 3 quarters, we expected that it may go up to the 15%, we have provided at 15%. Now the industry level bipartite settlement has been happened, and they have signed that pact, whatever it is their agreement between these two, and they have signed at 17%. So we have calculated for the last 14 months what is the exact requirement up to December 31st, 2023, and whatever the shortfall, that entire shortfall we have provided. In addition to that, monthly we are providing 115 crores per month as calculated based on the 15%. But now it is 17%. It is a cost will be every month will be 129 crores. So in addition to that 129 crores for 3 months, it is a 390 crores. We have provided 400 crores, 400 to 450 shortfall, whatever it is there for the last 14 months. That also has been added. In addition to that, because of this hike in this wage revision, there will be an actuaries impact also will be there. That impact we assessed around 400 to 450 crores. But we don't want to keep it at the fag end of the quarters while paying that money. That's why we have taken, since we are comfortable in our position, we have taken that to 250 crores out of that actuaries. That also we have provided now itself.
Okay, just one final question on your loan growth, sir. Your loan growth is at a 7-quarter low. Just trying to understand that why is it that you're growing below the average of what, your industry or the peers are growing at? And what do you think the growth trajectory could be over the next couple of quarters?
So while giving that in the financial year itself, we have given you the guidance that the loan growth will be at 10.5, but we are expecting that we will grow at 12 to 14%. I interacted with you several times. I recall that the interactions. But during the last quarter, RBI has increased the risk weightages on certain exposures to NBFC and personal loans. When we have increased it has impacted our CRAR 52 basis points. So we want to pass on this burden to that for the NBFCs. 95% of we are the first banker to pass on that impact to the NBFCs. We have taken a corporate call that it has to be shared by both the parties. So we have negotiated with all the concerned NBFCs. 95 to 97% people have come forwarded and shared that burden. Only 1 or 2 cases where they are not their corporate call, as per that they are not inclined to increase it. So we have taken a call to let go approach. That's why we have taken the prepayment from them. That's why you see that our NBFC exposure, it has come down from quarter on quarter sequentially from 143 to 135, 1,35,000 crores. Otherwise, it's not that we are not growing below that. Our RAM credit, it is growing at 14.59, all-time high. This is the growth. And our guidance also, we have given that we want to inch towards the more RAM. And we want to maintain that around 60 to 40% between the RAM and the corporate.
Sir, thank you so much for answering all of our questions. Appreciate your time here on CNBC TV18. Well, Ceat is the other one. The stock is trading in the green. It was a decent set of earnings that the company reported. Revenues and volume growth saw an improvement, margin improvement as well. Stock is actually trading in the red, I beg your pardon, down about 1.5%. We have Arnab Banerjee, the MD and CEO at Ceat, who joins us now to talk about that. Arnab, thanks a lot for joining in. I wanted to start by asking you about the volume growth this time. Volume growth is just about 7%. And given that there is a lot of competitive intensity in this space, do you think it will be hard for you to get to double-digit volume growth in FY24 itself? And what does FY25 look like in terms of volume growth? What are you forecasting? Arnab, I think you're on mute.
I'm sorry about that. So
quarter
growth was very robust at about 12.5%, led by international business at 25%. Replacement volume growth was also very healthy and OE was a tad lower. So we are looking at a similar kind of volume growth in Q4 as well.
What was the OE volume growth, Arnab?
OE was a tad lower. Replacement was very good. Exports was the highest at about 25% in Q3, YOY.
For FY25, I mean, as we look ahead, what should we expect in terms of volume growth overall?
FY25 is a bit far away. We are in the planning process right now. But given the OEM growth that we have witnessed in the last few years, if we translate it to replacement and our ambition in international